Hi everybody, this is Chris with Invest LYH, and I'm going to do a quick video today on listing talk, but I have in parentheses there, well, supply and demand talk, because I was recently sent this article about the fastest markets in the US that are fast in terms of cooling, not increasing price. And so I have the little article right here, and then I listed out the price, the basic overview of what the article said right here. And the link is right down here, gobankingrates.com, investing in real estate fast cooling markets. The idea behind this, I think, is that they want to say, like, you can see that prices are beginning to change. So my initial thought on this was, oh, okay, so this one's going down. This one's just cool, and this one's going down. And then I looked through it and I said, okay, there's only two negatives. So there's only two that are definitely going down. The rest are just what happens is if this 3.7 was a 5.7, well, it is going down, but it's still a 3.7 increase rather than a 5.7 increase. So you're still getting appreciation. You're not getting price drops. And I think that it's a little misleading when they say these kind of things because I'm sure they are assuming that people will make the connection of a cooling market means dropping prices. And I think that's a little disingenuous, but that's okay. But let's talk a little bit about the price and how we come about price. And we're going to just grab a quick supply and demand graph. We have demand one, supply one, our quantity on the bottom, price on the left, and zero in the corner. Where they intersect is our equilibrium of price one for quantity one. And what the article and most articles are starting to imply is that the reason why our prices are going to drop is because our quantities are going to increase, meaning our supply will increase. It'll go away from the zero, meaning it's going to put downward pressure on the price. So we're going to have a higher quantity, quantity two, at a lower price, price two. And I think that that we thought that that would be the case initially post Great Recession because that is what happened. We had a lot of foreclosures on the market and the supply was flooded. So quantity grew and we had lower prices. Builders have stopped building the way they used to. If you look at the building statistics for new builds, they go like this. We hit about 2006 and now they go like that. So what does that mean for this scenario of increased supply? Yes, we could see the supply curve move, but we could also see an expected demand curve, DE, move, which means we would need to push out because the idea here is we want to maintain or get a little bit above a certain price. So if we maintain, that's this price level. If we get maintain plus a little bit, so let's just say a percent, it's going to be this level on the new demand curve. And what happens is people built supply to meet the expectation. However, demand softened. Instead of demand being here, demand ended up being, oh, hold on, got to draw a straight line here, which we would call demand reality. And so so what this would look like is on this new graph of supply expected, the demand is actually here, which means our prices are lower than what they were, and lower than what they expected the rise to be. And our quantities are higher. So if we did quantity real versus quantity past and versus quantity expected. And this is an interesting point because now a local leader can come in and say, well, we knew they were going to grow and now prices are falling, so we're helping you. They knew they were going to grow, but they wanted them to grow to this point, not to the reality. So in order to test that, what I did is I was like, okay, let's take a look at their information that they have here. We have median price per square foot, the change, and the percent of sellers dropping their asking price. Sorry, it's the morning. I have to have coffee. I think this is a good statistic. This is a good statistic. I think this is irrelevant. I just think it's irrelevant to the information. If we're looking at this from a supply and demand function, because this is just telling us the supply is growing. The thing about the percent sales of sellers dropping their asking price, it has nothing to do with the transaction because it could get sold, but it most likely will just be pulled and they'll use it as a rental or they'll um, live in it still. So I went back and I looked at some numbers. Here are all the numbers that they have. Okay. I double checked their median price. They all checked out. I I looked at the square footage because I wanted to see, okay, well, what is the square footage of these homes? Is it if the square footage was like 6,000 square feet, then we know that we're not dealing with reality. But these all check out. They all look like normal homes. I did look at the new listings for the past 3 months just to see if there was any huge bumps. But then I grabbed the population and I said, what percentage of the population was the new listings? And we can see here that it wasn't a ton. I think Houston was the biggest, or Denver was the biggest one at about 3% new listings for pop for Denver. Then I said, you know what? Let's look at the history of the population. And I said, let's figure out the difference between 22 and today, 2024. This is where it became very interesting. Negative, 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 negative by 6 randomly, and then the rest were positive. So, and here's an interesting fact as well. Houston grew by 147 people for a 2.3 million person population. Now, that's flat. This one here, so this one is actually, it looks like it's a pretty healthy population increase over the last few years. Um, Now, I went to Tampa recently, and I can tell you the prices there are pretty high, so it's probably slowing, but this is the key, right? They are saying listings are just jumping on the market, so we're going to have a cooling housing market. And to an extent, it is true. The housing market is cooling, and a lot of supply siders out there will dislike this, but listings are not causing the market to cool. What's happening here is if we have the supply and we have the demand, these numbers from here up tell me that demand was expected to be here, but in reality, it's here. Or it's even worse, it's here. Demand reality too, causing people to lower their price. If this is price one, this is price expected. And in some cases, with the decreased population, this is price reality. This would be price reality as well, with low demand, low demand. Has stuff to do. It has something to do with um, supply, but it doesn't necessarily have to do with the features that a lot of people, a lot of so-called economists are looking at online. And I thought that I would just share this with you guys and show it to you. And just so we're clear, I do think that Jacksonville and Dallas are kind of outliers because Jacksonville is such a huge, it's almost a county size. And then Dallas is kind of like here. And then you have like Plano, McKinney, Frisco, Allen is somewhere around here, I think, or maybe it's Allen here and then McKinney. Um, and now they're getting like Melissa and what's above Frisco, Prosper. And then they have all these other towns right here that pop up. And what happens is, yeah, Dallas uh, might be flat, but this might be growing, and this might be growing, and this might not be growing because people are settling around the major city. In Jacksonville, it's a little odd because it is a big city. So in Lakeland, again, 17, I mean, give me a break. But just for a little bit more context on why I believe this is more of a demand issue than a supply issue, does not mean that it's not a cooling market, but I do believe it has to do with demand. I looked up North Point, which is number one on the list here. Northport, excuse me, Northport, Florida. Um, and what I found was that in 20, I think 2 or 3 years ago, they had 181 listings. And then it bottomed out in October of 22 through February of 23 at about 120 listings. That's so small. I mean, here in Lynchburg, we have at least 300 listings on the market right now. And we're saying that this is a cooling market based on 100 and what if we have, what if that has like 190 listings on it right now? I just don't think that that's accurate analysis. But anyway, 15-minute video. I will get this shared later, but I wanted to just kind of go through a quick article with you guys and give you an explanation using a supply and demand metric in terms of understanding the cooling of a housing market. Is it demand focused? Because here's the thing. If it's demand, last thing, if it's demand focused and not supply focused, the listings, if we have demand reality here and we go from this price point here and we go from this price point here, they might not sell because they will have a threshold that they will not go under. But anyway, if you guys have any questions, let me know. Just thought I'd share that. My wife sent me that story and I got thinking about it. So talk soon, guys.